Oh my God, the stock market's crashing. Is it going to be a complete correction? Am I going to lose it all? Did I make the biggest mistake of my life by quitting? What's going to happen now? I'm Noel.
I'm Jenny.
And I'm Cole.
And we're living overseas on a dime.
That's a Jen. So yeah.
Hi there, this is Noel and welcome back to Living Overseas on a Dime. Hope that things are going well for you. And I just wanted to say hi. I know Jenny did her last video in relation to thrift stores and thrifting like a pro. And I hope you enjoyed that. We're going to do a little bit back into the financial side of things. Talking about, is the stock market going to crash? Will there be a correction? And we'll get to that towards the end of the video today. Hope you can stick around. But to start out, we're going to talk about something that I don't think it's discussed enough in financial circuits and in financial vlogs, and that's just straight out fear. Now, you know, fear has been covered in a lot of different movies.
I must not fear. Fear is the mind killer. Fear is the little death that brings total obliteration. I will face my fear.
In a lot of different places. But it's rarely discussed when it comes to investing, and especially in relation to retirement. Now, fear is something that is a big part of investing, I think. And investing is much more emotional than a lot of people think. Which, you know, it's something, it's one of the main reasons I think that financial advisors do well, is because people are afraid and they need someone, even when they do know what they're doing, to give them some reassurance and even sometimes some hand holding, and even telling them, hey, time to back off a bit. You know what? Don't worry about what's going on, and just give it some time. So I think that fear in relation to retirement, and more particularly early retirement and financial independence, has a couple of different forms. The first is, how old will I be, or how old should I be when I retire? Which is combined with another thing, which is, will I have enough money? So, you know, you have to look at a whole bunch of different factors when you're looking at that, of course. You have to look at how much money do you have? How much money are you putting into your retirement or your investments every month? And what is your expected rate of return, both leading up to your retirement point and then afterwards? And also, of course, how much do I need in retirement, which is a way that we have definitely kind of gamed the system to our advantage, because we will need a lot less than someone who needs, say, money to live in a more expensive city in North America, like Toronto, Vancouver, San Francisco, Los Angeles, New York, whatever. So how do you look at what is enough? Okay, how much is enough? Enough is a big part of my personal philosophy, and figuring out how much money is enough is something you really need to look at to be able to come up with the numbers that really kind of satisfy what you're trying to get. Okay, so first and foremost, I mentioned this in the other video, but the 4% rule. So 4% is generally the number that is looked at of your total amount that you have when you're ready. So let's make an example of, say you have $500,000. So 4% of that is $20,000 a year that you could utilize. Now this number is based upon a traditional retirement age of 65. So you may want to tweak that to be, you know, more on the 3.5% or 3% range to feel safe with that amount. Another thing to remember is, if you are retiring early, no one says that you can't go back to work. So that retirement could be just what I like to call a retirement sabbatical. So this is very similar to our situation where we will likely be retiring and, not really retiring, but spending a year or two traveling and just enjoying ourselves until we focus on our business again and just see where that takes us. But, sometimes we just need a break, especially after COVID and after being burnt out from the last few years. You're at a point where you're like, okay, enough is enough. Let's relax, let's chill out, let's take some time for ourselves, do some self-care, and maybe do a whole bunch of yoga. I don't know, whatever makes you happy. For me, it's guitar and yoga and running. So I'm looking forward to being able to do the things that I really love to do. Now, let's talk about the stock market itself. Stock market, investments, S&P 500, call it what you will. Fear and the emotional makeup of the herd is what propels the stock market in the short term and can also destroy it in the short term. Long term, that is not the case, but short term, it really goes up and down in ways that are determined largely by what the kind of group mentality has determined. Now, what happens is this thing called FOMO, the fear of missing out. This is a big fear with a lot of people when they see the stock market going up and up and up and up. And they're like, oh my God, I don't want to miss out on this. I can make some serious money. I also just don't want to miss out on this possibility, right? This is a big chance for me. I got to take it. I got to take it. I got to take it. And then what often happens is they buy and they buy and they buy and they buy and they buy, and then it crashes. And then once it crashes, these people are generally stuck holding nothing. And they're like, oh my God, now I got to sell. So it ends up being the exact opposite of a healthy investing strategy, which is buy low, sell high. Instead, your emotions tend to rule what you're doing, and you're buying high and then buying higher and then buying higher and buying higher until you sell when it's at its lowest. And this is an absolute recipe for disaster financially. And sadly, it's what a lot of people, when they're just starting out, do with their investments. Now, a lot of people do that and then they learn the hard way, okay, this didn't work. And luckily in the beginning, you don't have a lot of money to lose most of the time. And hopefully you didn't get a big investment and lose it that way. But a lot of people instead, they'll start out that way, try some risky stuff and go, okay, what do I got to do to make this a lot more lucrative in the long term? Because long term is what matters in relation to financial independence and retiring early, or just even having your money last a long time. Let's talk about the market. Is the market going to crash? Is a crash coming? Yes. I predict 100% at some point in the future, there will be a market correction. The market will crash. But it always crashes. It always crashes, and then it comes back, and then it crashes again, and then it comes back again. That's the nature of the stock market. There's nothing you can do to prevent that, and mentally you have to create a strategy that allows for that. And mentally you have to be ready for when your investments are going to go down 5, 10, 15, 20% for a year, or maybe 2 years, or maybe even 3 or 5 years. Now, that's kind of a worst case scenario, and we haven't had that in quite a long time. But if you look at something like, of course, the Great Depression in the 30s, you look at the 70s with stagflation, going into the 80s where they had heavy inflation. So you have to prepare for these things and look at it as a sort of process that happens. And just be aware, okay, this may happen. And if it does, what is my plan? Now, this is important. You need to have a concrete plan. Now, personally, for myself, what I've done, and this is not advice, is what I've done, is dollar cost averaging into index funds. Okay? Now, that can be through ETFs or mutual funds, as we've discussed before. But as you slowly add money over time, it will build. However, that being said, you need to ignore a lot of the market noise, which is It's gone up 2% this day. It's gone down. You know, recently in the last couple days, there's been a lot of turmoil with the China situation and a couple of very major real estate companies there having debt issues and their debt possibly causing a lot of trouble. Well, yeah, the market went down 2-3%. So what? That happens all the time, and you just have to ignore it and go, okay, my money is here for the long term. Just keep investing. And you know, if it does go down a large amount, it just depends where you are. If you're at the point where you're still putting money in, that's a buying opportunity, and you have to look at it that way. If not, and you're taking money out, that's a different situation, and you definitely need to have some sort of plan that takes that into consideration. Now, some people will have 1 or even 2 years in their emergency savings in case this happens. So if there is a downturn, they can take it from that money instead of from their investments, because really, experience has shown in a lot of cases that the quickest way to kill your retirement fund is by taking out a large amount of money when the market is down. So if you can prevent that in the first few years, your retirement accounts have a much larger chance of growing to a point where that is not a danger anymore. Now, people in the last decade have forgotten that because the market has been so strong in the bull market from the 2008 crash up to the present that people have just selective memory, so to speak. It's like they've completely forgotten and wiped all of these crashes before. Don't expect them. The market crash will happen. It's a question of not will it happen, when will it happen? And when it does, have a plan in place. Know what you're going to do and what you're not going to do, because ultimately, just leave it alone. If you leave your accounts alone, likely is they're going to come back. And ultimately, if the market completely crashes, and I've said this to a lot of my friends, if the market completely crashes, you got bigger problems because it means the economy's collapsed. And maybe you need to fight off hordes of zombies. I don't know. I don't know what the plan is, because it's going to be a wasteland and you're going to be out there foraging for mushrooms with your shotgun and your shovel. I don't know. Anyways, there's a lot of bigger problems than the market has crashed if the entire economy's gone. So, you know what? Have a plan, make a plan, stick to your plan, know what you're going to do when things start to go sideways. I hope that that's helpful. Maybe not what you're looking for, but have a good week and happy travels.